Bitcoin down. It won't stay down. Want to know more? Stay here. This is the Market Update. I'm your host, Bill Noble. If you need a roadmap in crypto, subscribe to this channel. Turn on alerts so you know when we're going live. And if the content works for you, please hit the like button. All right, let's give everybody a minute to come on in here. We're doing a special late day edition because of the market volatility. Okay, so right now, Bitcoin down almost 4%. ETH down after a series of bank failures. So what I'm going to do is I'm going to go over the news. Then I got a PowerPoint deck where I'm going to explain the connections between crypto and legacy. And then I'm going to do on-demand and live TA for Bitcoin and relevant altcoins like Avalanche. Avalanche and Solana were big participants at the Consensus Conference last week. All right, let's welcome to see who's here. Jeff from New Orleans in the house. Welcome. Kennedy, Douglas, right? Sheb Ant is here. Welcome, right? Fernando, Dakota, Rave Song Records, Everything Tennis, Willimeter. We're on for our friends today in Australia. Our friends in Europe, we'll see it tomorrow. Don't worry. We will do an early stream this week, most likely. Seth likes the new glasses. Yes, these are special blue light glasses. So protects me from the bright lights of Hollywood. All right, let's do the news. Let's do it. What you need to know about the Biden administration's new mortgage fee. Changes coming May 1 could boost the cost for some borrowers with high credit scores. Okay, so let's talk about what the government is trying to do. It's trying to help people who can't get credit, right? Trying to help people who can't get credit because no one wants to lend money for real estate because real estate's probably got 20 to 30% downside. Now, if you've got good credit and if you're getting taxed, what's the incentive to have good credit? This, to save you majoring in economics, is called unintended consequences. Now, speaking of unintended consequences, does this encourage banks to lend money to people that don't have good credit? Wait a minute. Are they incentivizing the thing that created 2008 in the name of equality? Look, folks, I get it. I know that there are people out there who need help. I get it. There are people who need help. Here's what's funny. The government is always the wrong people to help them. Ronald Reagan had a joke. It's not a joke, you know. Be careful when somebody says, I'm from the government and I'm here to help. Yes, it would be nice if people with money helped people that didn't. Perhaps a tax deduction for lenders is better than actually taxing people with good credit. Having good credit is not easy. And now they're taxing you for having good credit. What's next? Going into your bank account, social credit score. This is like an innocuous warm-up. Now, which is more scary? The tax on good credit or the IRS hiring federal agents? Okay. I would argue the tax on mortgages is worse. Much worse. Here's the thing. It's not a secret that the U.S. government believes their money is their money and your money is their money. Is this really fresh information? I don't think so. It's not fresh information, right? That's why when they're selling Bitcoin down 4%, hysterical. Okay. I know there's scary stuff going on in legacy. I know they're afraid of the Fed. But why is everybody selling the instrument of freedom? Makes no sense. Taxing people with good credit is worse than hiring federal agents, right? A federal agent is just that. It's an agent, okay? An agent has to be prepared to use deadly force because someone's going to use deadly force on them, right? People with badges and guns really are not that different across agencies. They have badges and they could be in harm's way. Yes, it is popular to not like the IRS, but we have to give these federal agents an opportunity to defend themselves if necessary. So this is not the reason to own Bitcoin, even though they do want to take your money. This is the reason to own Bitcoin. Because when the government takes in and takes your money for having good credit, that is only the beginning. The probability of you winding up on the wrong end of, an agent defending themselves is low. The probability that somebody identifies you one day as having money or rich or, in a social class that the government can come up with a propagandized reason to tap into your resources. Atomic MacOS stealer malware getting into iCloud, Keychain, credit cards, crypto wallets. Curious that this appears right after Mac has got the Bitcoin white paper somehow sewn into its programming. Not a real big believer in coincidences. Not a big believer in coincidences. Obviously, please secure your crypto. Now, as is always the case before you have an avalanche to the downside, Pepe enters the top 100 market cap. Okay, so frog meme coins are here to stay. We actually did some very outside the box analysis with my co-host Toby. Okay, she actually said Pepe had more of a near-term catalyst. So really interesting that a week later, Pepe took off. Make sure you watch that video. Coinbase exec uses ChatGPT to get odds on wild crypto scenario. Okay. According to ChatGPT, there's a 15% chance Bitcoin will fade into irrelevancy, falling by 99% by 2035. Okay. Coinbase executives claims to have discovered a jailbreak scenario. Okay. So let me ask you something about this. I asked ChatGPT once about what happens if 1% of the $17 trillion in the U.S. banking system as retail deposits goes into Bitcoin over a 6-month period. The middle of the road scenario was like 80K. I asked it the same question about the 56 trillion in pension funds. And if 1% of that had to go into Bitcoin, you got huge numbers. The highest one was 200K. Now, could Bitcoin fade into irrelevancy? Sure. Something else could take its place that's faster, cheaper to transact. So for the moment, it's Bitcoin, and it may be Bitcoin forever. Right now, I think it's Bitcoin because people have got to get themselves out of the banking system, right? Now, artificial intelligence will give you odds, right? I have used it for this. You have to sort of coax it into letting you do it. It doesn't just, you can't just sit here and use ChatGPT as prompt number 1. The best answers frequently come after prompt number 12. That's what I've noticed. I was working on the full moon. More on that in a minute. Edward Snowden Researchers to train AI better than us. So I was at Consensus. They saved Edward Snowden for last. He was up there with the CEO from Singularity, that's AGIX. Snowden, of course, reminded everybody about how nefarious the government could be with AI because they wouldn't need operators like him to do data queries. The AI could literally just sort of be taught or start teaching itself how to do data queries. Now, Snowden was surprisingly philosophical in saying that, you know, if we teach AI the way we're teaching ChatGPT, it's the equivalent of educating your child using YouTube comments. Now, I happen to like your YouTube comments, so feel free to comment down below. Okay, but the point he was trying to make is don't use Reddit. Don't use dumb tools to teach AI. Make AI better than us, right? This guy was so compelling in 2022 when he criticized Bitcoin for not having a privacy layer. And when this guy said what he did, ironically, I thought the crowd was a little thin, especially given that it was Snowden and an AI conversation. Now, speaking of AGIX, I am going to continue to talk about that on this show. I did meet the Singularity team. I asked the CEO, or at least the sort of the brain trust behind AGIX, about how the firm created value in a Q&A after Snowden. Okay, his answer was so good that one of their employees, who allegedly taught the founder of Cardano everything he knows, going to find that out if that's true, okay, said that she wished she had recorded what he told me. AGIX, or SingularityNET, has a stablecoin that runs on AI, as well as a DAO token that's going to, you know, perhaps aggregate altcoin into indices. Anybody who's been watching me for 3 years may note that sounds familiar. The best conversation about AI was Snowden and the guy from Singularity. Gary Gensler says the SEC believes Ethereum is not a security. This is back in 2018. Okay. So let's talk about the SEC and what big players want to do in the financial space, particularly in the legacy financial space. So you can get a lot of views and a lot of clicks for saying Gary Gensler wants to keep you poor. He wants to keep the small man down. That may be true. Actually, I think Gensler is really a mouthpiece for the White House. As a matter of fact, I went to a policy seminar at Consensus, and one of the panelists, who was, you know, obviously in the know because she was a panelist, said the SEC and anti-crypto regulation is being directed by the White House. It was like, oh my God. So a lot of people are like, Gensler is the bad guy. And I'm like, Gensler is like Kermit the Frog. He's the puppet and someone else is talking. Now, I don't know who that someone else is, right? One person said it's the executive branch. That's nice. Well, who's telling the executive branch? Somebody who's afraid of crypto. And these guys are going to try to slow down crypto, particularly as legacy kind of melts down. We're going to talk more about that later. But there's a different way to look at Gensler after what I just heard at Consensus. Somebody big wants to put the brakes on crypto, and it's not the regulators. It's the people who are afraid because they see what's going on in legacy. Here's another hint. Who wants to slow down crypto? The same people who called Jamie Dimon and told him to take over First Republic, which is the same people that called Jamie Dimon and told him to take over Bear Stearns or Merrill Lynch. That was Bank of America. right? The same group of people in power, just different parties. Okay. Emerging market kingdoms quietly mining Bitcoin for years in the Himalayan kingdom. You know, the beautiful thing about Bitcoin and crypto is that anyone is welcome. Everyone is free to play. And when you sit next to somebody at a crypto conference, you don't know who you might be sitting next to. You really don't. You know, in other words, somebody in the Himalayas wants to mine crypto. Great. Maybe somebody in the Himalayas believes in freedom, as do I, which is what this show is ultimately all about, along with market analysis. Shark Tank, but make it crypto. CoinMarketCap launching a competition TV show, allowing entrepreneurs to pitch ideas for new Web3 projects. You know, when I was at Consensus, when I hear someone talking about Web3, 75% of the time, I wonder if they know what they're talking about. The only people that in my mind know what they're talking about when it comes to Web3 are two groups. Artists, okay, like real artists that create like 45 different NFTs or 45 similar NFTs, all done as originals. And people in fashion, digital fashion, phygital, where you get a physical and a digital item. And some people just want digital. And then there was also an incredible question asked at a session as to how do I make money, or how do people who actually live in, say, urban hip hop related areas, forgive the terminology, how does some big player pay those people what I would call a cultural commission? Easy. They're going to use DAOs for fashion. DAOs. It's going to happen. That's Web3. Web3, I think, is art and fashion. Global leader Syria urges BRICS to lead ditching the dollar, talking adoption with China. Okay, here's what this headline should read. Note that it's in Bitcoin.com. Dollar must fall sharply to alleviate debt crisis. Now, the flows regarding the dollar that you need to pay attention to have nothing to do with trade. As I always say, whatever's in the media is inevitably wrong. Okay, the thing that people can't see, just because I have a friend who can see it, is the amount of money flowing into our bonds is falling, which is why you can have a bank failure and have interest rates rise massively the next day, because no one wants our debt. That's the problem. And the fact that the dollar has to fall sharply, which is why I'm really hesitant to be bearish Bitcoin, down 4%. Matter of fact, I'm hesitant to be bearish Bitcoin, period, even if it winds up trading in a choppy range between, say, 27 and 30. Right? In other words, every time they dip it, right, particularly into like June, you got to start asking yourself, am I going to give up on Bitcoin because hedge funds had kind of a sell everything day where risk models and big players, risk management models inside big hedge funds beep sell because stocks, bonds, and crypto were down? Those are opportunities for people who understand what's really going to happen here, which is that we could be in a decoupling era. And even after June, like I can't even control myself. I'm actually getting more bullish, even though I know it's going to kind of be, sell Memorial Day and go away. Bitcoin is going to price in an entirely different future, quite possibly even before the stock market goes down in October. Charlie Munger, U.S. banks are full of bad commercial property loans. Well, this guy is all over the tape saying negative things about Bitcoin, and you certainly get views on YouTube making videos about him. I didn't realize the guy was basically 100 years old, although he does look it, right? I guess I can make jokes if I make it that far. Now, one thing this guy did say is that it's not nearly as bad as it was in 2008. Now, history often rhymes. Doesn't repeat, but it often rhymes. It may not be as bad in the private sector, but it could be that bad in the public sector. The problem could be with our debt. Elon Musk rolls out a paywall for Twitter's data. Imagine making money off data in the age of AI. Hopefully, if Elon makes this work, he can hire back some of the staff that he brutally let go. So I favor Elon. I love Twitter. I love being able to say what I need to say on Twitter. But this is actually a smart move because the most valuable thing Twitter has is the data on who says what and who likes it. So if you want to make AI, you got to pay Twitter. Now let's talk about the dollar. It's a very long time since I felt so optimistic about Britain's economic future. Now, since we're doing this at 6 p.m. at night, I'm sure people in England may be falling over at this headline. But the fact of the matter is, England has liquid natural gas ports. They've been at the cornerstone of helping get energy around the Russians to Ukraine. And they've got an interesting little finance hub developing since they've left the euro. Now, if sterling is at 125 and sterling goes up, guess what? The dollar goes down. Now, I know we're basically trained to hate all of fiat. It's a crypto channel. I get it. Okay. But what happens if sterling goes up and takes the rest of fiat, particularly like the euro, with it? The dollar's going down. So you've probably heard the scenario for the dollar lower, although maybe you haven't heard my scenario about, demand for treasury bonds and treasury debt drawing up to where there's just less demand for dollars. The issue isn't, does Argentina decide to drop the dollar and trade directly with China? The issue is, are all the giant countries in the world, like the Japanese, the Europeans, are they buying dollars and taking those dollars to buy our debt? This is the question people are not asking. Now, if you have a hopeful turnaround situation in the UK, you have trouble for the dollar. Speaking of managing fiat, EU plans to Ukraine adopts the EU's crypto regulation. Okay. Now, somewhere in here, they need standardized rules for crypto because they've got to make sure that the crypto that comes into the country, that they have visibility on it. Okay. The other thing that they need is they need to make sure, ironically, that Bitcoin and crypto don't completely undermine their currency into itself. Okay. So I'm glad these guys are on board. Necessity is the mother of invention. Want to know what the best way to make the Ukraine currency popular again? Have it trade versus Bitcoin. Be able to have crypto go back and forth between their currency. So yeah, get regulations in place, get visibility. Get it on the books effectively. Okay, so that's the news. Let's see who else is in the chat. The Fuzz Crypto is here. Euro Rack Crypto, welcome. Digital Bobby, welcome to the show. All right, one more news item, actually two more news items. Just coming in hot now. One thing I forgot was the Solana phone. I didn't hear much about it. They had a Solana deep dive at Consensus. Okay. Solana GPT allows the plugin to fetch blockchain data. So it's kind of like Nansen for Solana with AI. Pretty cool if you ask me. The Bitcoin white paper is going to be removed from Apple MacBook update. The Easter egg went viral earlier this year, but won't remain on Apple for long. Yeah, that's because they got tapped on the shoulder and told to get rid of it. By who? Okay. Hellrod says he heard Gensler wants to slow crypto down until a USA CBDC is live. Hellrod, great point. Let me tell you about this stablecoin talk I went to at Consensus. So it was sort of like in the tech section, a tech stage. They did this really great, sexy headline for the talk, like Ethereum developer talks about what it's like to work with governments on CBDCs. Freaking standing room only. Well, as it turned out, it was a technologist who didn't really know much about working with central banks, but she did put the tech stack up for what a CBDC would have to do, right? How many networks it would have to connect with, how many banks, public blockchains, private blockchains, consumer wallets, okay? Everyone's like, oh my God, they're taking over the banks so they can do a CBDC. Yeah, probably, because that would make it easier. That would make it easier. You know, it would all be on one system if the banks were nationalized. However, my point is this. I heard another talk where somebody said, you know what? If you're using a regular stable coin, do you think that stable coin is any more private than a CBDC? Like, yes, there is talk that, you know, the government can issue the CBDC and they can take it away or lock you out of your apartment. But let me ask you something. If you're using a regular stable coin, do you really have privacy with that? You saying the government can't go to Circle and say, you know, give me every wallet address of everybody who's got this? So I'm not saying that, you know, stable coins are bad. What I am saying is deploying a CBDC is harder than you think. And whatever you're afraid of CBDCs, most likely stable coins are just as bad. Because if they want your data, they can get it. If you don't believe me, watch what Edward Snowden has to say. It's now online. All right. Steve Mesa is here. Welcome. Steve's asking if Bitcoin is going to 25K. Honestly, I don't think so. Okay. RYRN says sell in May and go away. I'm going to bet that that's May 20th. I know breaking things down to days is difficult, right? I don't really want to be short Bitcoin at 27K. Could they wash everybody out? Yes, they could. All right. Today's Monday, May 1st. You could see like one more day of a washout. But I think there's more risk that this thing turns up and rallies in everyone's face. Because the reason it went down today, it was just a consensus position, meaning not the conference, meaning just a lot of people are long Bitcoin. And when Bitcoin didn't go up after First Republic failed, everybody sold. Everybody sold. Everybody bought it up at 29. and they sold it at 27. Now, could they take it down to 25? Well, anything can happen in crypto. I would consider that a major opportunity because I think there's going to be a rally all the way through the Fed and just after the full moon and lunar eclipse on the 5th. Just as a point of information, eclipses are out with the old and in with the new. These destroy legacy institutions, in this case, banks, junk bonds, commercial real estate, and usher in the era of crypto. They can try to slow it down. They'll try that in June. Good luck. We'll be down there grabbing it, or at least I will be. All right. So it's not investment advice to talk about what you did or you're going to do. Now, U.S. rental market competition. Tough chart to read. This fourth line seems relevant. It's fuzzy. It says the percentage of renters who renewed their leases this quarter. People are saying, have a nice day. I am not renewing. Buy. I can find a lower priced unit. I would expect that to continue. Let's talk about Bitcoin and the full moon that's coming up. Now, I do like planetary movements and astrology mixed in with TA. It's like a hobby. Now, I don't like to just necessarily plot full moons and new moons because I think there's more to it than that. However, lately it seems compelling that the market loves to wash people out right before or sort of in the proximity of a full moon. It seems to happen right on the full moon or just after. And they love to flush everybody out like the last two times below the 21-day moving average, which is a key moving average for momentum, only to see this thing come ripping back in your face. Okay? So could Bitcoin go down another day? Maybe. Maybe it goes down overnight. Okay, but if you see sub 27 Bitcoin, like I want to buy Bitcoin below 27K. Let's put it that way. Because I think what they're going to do is they're going to stop everyone out and then they're going to rip it up. I don't know how big the rip is, but I think the Fed is going to hike rates and acknowledge risks to the economy. They're going to continue to tighten, but they're going to acknowledge risks. And that's the ultimate environment for Bitcoin. A Fed who says they want to break something that's cracking can't get any better than that. So on one hand, the government's trying to stop crypto via the executive branch. And on the other hand, the Fed's going to hike rates in the middle of a calamity and probably continue to do so until something absolutely breaks. They actually want it to break. They want the dollar to break. They need the dollar lower. They need the dollar lower. The only way to solve a debt crisis is to devalue the currency. I know you're tired of hearing me say that. I'm going to say that all the way down to 90 in DXY. Okay, dollar index monthly. So we have some action here around the 21-month exponential moving average. Very reminiscent of the breakdowns that you saw in June of 2017 and July of 2020. DXY put up a really good fight, okay, as it was breaking down. Specifically, DXY would break down just below the moving average, pop back up the next month, and then turn around and embark on a multi-month downtrend. Most noticeably, the collapse in July of 2020, which triggered DeFi summer and a massive rally in crypto. Now, could this take a month to develop? Yeah, maybe. Maybe. Okay, could they smash the dollar down lower and then maybe bring it back up later in the month? Yeah. I don't think anyone's seen this yet. I don't think anyone's paying attention to the tactical implications of monthly charts, right? Like if you look at this and you go, gee, this looks kind of like 2020, and gee, this kind of looks like 2017, where the dollar had these like, you know, 1, 2, 3, 4, 5 down only candles, right? This was 1, 2, 3, 4. It took like 4 months out of a period of time for the dollar to just vaporize. What do you think is going to happen when nobody wants to buy our bonds? Like this thing that I was talking about earlier, this tax on mortgage rates. You know, the foreign exchange market can look at things like this and go, as it relates to a currency. One of the good things about the fiat foreign exchange market is they can play economics, interest rates, and they can also take a look at a political situation and go, we have no confidence in this government. Sell. Happens all the time with European and Asian governments. Now it's going to happen with ours. Because I don't know what we're doing. We're taxing people for higher credit. We're disincentivizing people. We're hurting one person to help another, when helping that person may create a systemic problem. The person with bad credit, if they can't get credit, or if their income is low, then maybe they don't pay taxes for a year. Help them that way. Don't punish the good. Don't. Because if you do, what you get is a disappearing currency. Everyone's like, oh my God, Syria wants to trade into yuan. Well, who cares? Who cares what Syria wants to do? Who cares if, smaller countries want to trade outside the dollar? Who cares if the French do a natural gas trade? That doesn't matter. What matters is where is the demand for the dollar to be used to buy treasuries? It's disappearing. At the same time, the dollar, people can just go, you know what? We're done with this. We're just done with you. Now, Bitcoin in 2013 and 2015, or 2013 to 2015, sorry. I did some fib numbers with the 21-day, 20-month exponential moving average. So back then, there was a breakout like the one you had now. There was a 2-month dip that got close to a key fib point and the moving average after the dip, right? So if it goes down late May and June, are you going to quit? Not based on this, you're not. Because if you got shaken out after the breakout in, 2015, 2016, this thing was up only into 2017. Okay, if you look at the equivalent of this chart now, I think 27K is the equivalent. So someone was asking earlier, excuse me, Bill, do you think it's going below 20? Do you think it's going to 25? I think the answer to that is no. So the next show will be interesting if I'm wrong, but it'll be even more interesting if Bitcoin down 4% was like a gift, especially if they puke it out into the Asia Open tonight. Okay, let's look at legacy. Blackstone. This is very relevant for Bitcoin. This is the largest holder of commercial real estate in the country. This correction up was A, B, C. So when Blackstone was going up, it was correcting. It looked corrective, meaning the trend was down. Then a new downtrend starts. Okay, the first leg down. Then the second leg down was this morning. So 1, 2, ugly failed rally. And then the 3 wave is coming, right? Which will probably take out the lows at 76. The CEO of BlackRock probably selling up here. Not probably selling. He sold $25 million worth. He sold what he could. Because this is probably the next AIG. This, Deutsche Bank, and maybe the big bank, one of the big banks in Italy. Like regional banks are all going to go down. And then when regional banks are done going down, the bigger players are going to go down. I don't think it adds any alpha to say regional banks are going down, although I can speculate that perhaps Capital One is going to have problems. Okay. Capital One has got 213 bottoms that absolutely failed miserably. In other words, there were rallies off these 13 and 9 bottoms here and over here, and they got sold. They absolutely got sold. So, you know, if you think this is over, what happens if everybody with deposits in Capital One wants to turn around and get into Venmo or Fidelity or whatever they can get their hands on, right? In other words, you got to start asking yourself, like, who does PayPal use as a bank? PayPal is not a bank. If your money is in PayPal, it's not in a bank. I mean, it is in a bank, but it's probably in a regional bank. Sorry. Okay, this is UnCredit in Italy. Noticing a grotesque failure at the 21-day moving average. 21-day moving averages are famous for being indicators of momentum. So it rides the moving average on the way up, it cracks it, and then when it gets back above it, it actually made a new high for the move. God, they love their banks over there in Europe, huh? This is going to be totally unaffected. It reminds me of 2008, of our Hong Kong trading desks making fun of everybody in New York in 2008, saying that mortgage-backed securities had nothing to do with China. You're right, except for the fact that when the whole system melts down, everybody goes with it. And it's time to start looking at these banks. It's also time to start looking at Deutsche Bank, which, like the dollar, is just now breaking below its 20-day exponential moving average, or 21-month. I'm sorry, it's 21-month, right? This right here is 21-day for UniCredit. This is 21-month for Deutsche Bank. All right, so that's the PowerPoint version of the market update. The long and the short of that is I'm not particularly interested in being bearish Bitcoin down 4%. It's a buy red kind of thing. All right. So Crypto Crazy hopes I had a good time at Consensus. I did. Steve is down with the afternoon alpha. Welcome. Okay. Mimi is here. Douglas, T Shroom, Metabice, Nevin, Bull Runner, Iron Alien, welcome. Everything Tennis, seeing some new names. Dakota, digging the late show. Fernando, welcome. Welcome everybody to the show. Live TA. Okay, Ethereum, 9 bottoms. No interest in selling Ethereum down 4%. This is a 90-minute chart. Bitcoin doesn't look as good, okay? You don't want to see a failed rally here. So let's go to a 4-hour chart of Bitcoin, see if we can get this to last. The juicy point to get Bitcoin is just under 27. I don't know if that's going to happen. I don't. But it's interesting that, you know, they're at least attempting to make it look like Bitcoin is going down. In other words, when you're selling Bitcoin at 27,000, who are you selling it to? Who are you selling it to? Right? When you look at the monthly chart, right, you usually get dips 1, 2, 3, 4, 5. Okay. The first part of a trend, according to Tom DeMark, a technical analyst, it'll have 9 bars. These numbers appear when a certain set of conditions are true. The high is higher than the high 2 days ago or 2 months ago. So if you could have 4 or 5 more up bars till you get to 9, and you get dips in late April and June, here's the question. Will the dip occur from 28, or will they rip this thing higher and then possibly bring it back down again? In other words, okay, you could say, hey, let's sell on May 1st and see you because there's something wrong with interest rates. Oh, okay. That's not an unreasonable argument. Okay. Not an unreasonable argument. But the thing is, if you wind up short Bitcoin and you get bearish when it's down 4%, you could get your face ripped off. Okay. Let's look at Bitcoin on a daily chart. Okay, so some people are going to argue that this is a shoulder, and this is a head, right? And they're going to start to get bearish and say that this is a head and shoulders top. That's always possible. That's how you would draw it. Again, obvious formations, they rarely work. And if Bitcoin does break down, it's going to be because everything else broke down. Okay, so let me just give you the bearish case for Bitcoin so you have it. The bearish case for Bitcoin comes from U.S. long-term interest rates. Okay, so U.S. 30-year bond yields, they help determine the mortgage rate. And this is a flag, which means interest rates are eventually going to break out and go higher, which could become the problem, I don't know, in June. There's going to be a problem with the credibility of our bonds. So if that's the case, that could hurt Bitcoin in June. Question is, where will that correction start from? Will it start from 28 or will it start from 32? I have no idea why people are selling Bitcoin. Like if you go to the banks part, okay, you got banks like Schwab unable to get back above their 21-day moving average. Absolutely no uptick whatsoever. You had a euphoric rally in, say, XLF, which I'm dying to look at on DeMark. XLF is an ETF of all the big banks. Look at XLF rally right into resistance and get rejected. Okay. 9 top, right at resistance, just like this 9 top. Okay. It looks like it's in a range. Like a dollar in the stock market, like Dow Jones stocks, is better than $1 in a bank account. Okay, but bank stocks themselves, especially if the government's going to nationalize the industry, you're like, Bill, what does nationalize the industry mean? Well, it means the government takes ownership, which means the people who own the stocks and own the bonds get nothing. They get nothing. How much did Jamie Dimon pay for First Republic? Not much. Basically, First Republic opens up as JP Morgan Chase branches. Sign makers are going to make a fortune. Donato reminding you to hit the like button. Minimize the window on mobile and hit the like button and come back in. Sheb wants to buy GLDN at a special discount, which is an interesting comment considering Block 47, where we tokenize New York's Diamond District. You can buy precious stones, precious metals, and jewelry as alternative assets on chain without having to go to a bank. That's right. You don't have to go to a bank. Anyone interested in that? I work for Emerging Asset Group and I own Gold Retriever. Gold Retriever will be essentially consumed when Block 47 revenue comes in. It opens tomorrow, helping GLDN move up. The same will be true for the Bark water token as we work rapidly to help the Middle East and the U.S. government get water that they need from Greenland to places where they need water through a blockchain-based mechanism. Okay? Steve J says it literally is a consolidation of the banking system, except the consolidator, unfortunately, is the government. Video game time warp. What do you think about a 12K Bitcoin scenario where we take out the 16K lows and then rip up after 12K? The weekly chart looks bearish when zoomed out. Okay. Let's talk about that. And do I love me a good question? All right. So if you look at a Bitcoin weekly chart, right? One thing you're going to know about TA, if you do enough of it, there are always going to be charts that are both bullish and then some charts that are bearish. The most bearish chart that I have is Bitcoin weekly, right? So the decline off the high at 69K was the first wave down. Big trends have 5 waves. So 1 down, and then 2 is corrective. 3 was FTX and friends, Celsius, the crash. The 4 wave could be whatever this rally is. And the 5 wave would by rule be lower than 16K. So how would that happen? Well, you would have to have a risk asset cataclysm. Now, that can happen in October. That can happen. I mean, if the Fed is going to hike rates until everything breaks, crypto won't be exempt from that. However, you cannot discount the fact that people are going to start buying Bitcoin way before that happens. And if Bitcoin ever did go to 16K or 12K, like you said, I mean, you'd have the whole world standing down there to buy it unless the event was so catastrophic, nobody had any money. Everybody's money was somehow locked up or lost. So could Bitcoin make a new low? Am I going to tell you there's no scenario where that can happen? There's a scenario for that to happen, probably in October. Now, my personal opinion is that the lunar eclipse is going to close out what started with an eclipse in November of last year, pre-FTX. So I don't think Bitcoin makes a no low, even though the D wave does exist for a 4-wave top and a 5-wave bottom. I mean, a Bitcoin at 12K would literally feel like the world was ending. You can say you want it. Trust me, you don't. You don't. But it can happen. Now, I think it's way more likely that instead of thinking about buying Bitcoin at, say, 12K, you got to ask yourself this. Let's do it this way. Bitcoin was below 20K. Let's go back to a monthly. Bitcoin was below 20K for how long? How long? Okay, there's 20K. You had a chance to get Bitcoin below 20K. 1, 2, 3, 4, 5, 6, 7, 8 months. And they even gave you another chance. They even gave you a classic GAN number 9 because they wicked it down to 20K right before they ripped it back in the opposite direction. I mean, nobody wanted it at 20K, which is why I think the market is going to force people into paying 32 and 34 before the June correction. I'm kind of betting on one last rip up. Now, if you want to fade me, if you don't like it, I understand. But at the end of the day, I'm still looking for places to buy it. Right? So the thumbnail for this show, has probably got me wearing a cowboy hat. Right? I want to be a Bitcoin cowboy, not investment advice. Right? I want to say You give me Bitcoin or Ethereum. You want to take it down to say 23,500? Okay. Okay. People starting to realize it's safer to trust a smart contract than a smart ass in a suit. Steve J, you're a prophet. Okay, let's take a look at some of the altcoins. Via live TA. Seems like most of the guys who are like furiously into like requesting altcoins are most likely asleep. Now, this thing, oh my God. I met these people at Consensus. This is AGIX. Man, do I understand why BitBoy is into this. This guy I asked this guy, how does his firm add value? People were asking him, like, what does the philosophical future look like when the machines take over? I asked this guy how his firm created value, and he talked about everything from DeFi to stable coins, and he said something to the effect that if AI is going to basically eat the whole world, you might as well get a piece of it. And I was like, oh my God. And they got a stable coin. I asked the group for the deck. So I talked to them, and then I went to the Cardano meetup after the head of SingularityNET spoke along with Snowden. Now, naturally, the Cardano meetup, I met a lot of people who helped teach me about Cardano. Okay, but there was a lot of technical jargon. They didn't spend enough time letting the guy from Cardano or letting these guys from AGIX talk, because there's a relationship between the people that run AGIX and the founder of Cardano, to include people that are said to be the mentors of Charles himself. So when AGIX puts in a 13 bottom and they want to puke this thing out, like the best thing that could happen is that there's this puke over like the next 24 hours, that they just take it down one last time. I don't know if we're going to get that lucky, but I am telling you this. I am going to figure out how to get this in my portfolio. Okay, Solana, which everyone seems to love to hate, including my chart system because I can't call it up. One thing that was very interesting today is that altcoins, Bitcoin did better than altcoins. I'm sorry. Bitcoin did worse on the downside than altcoins did. Right? Altcoins actually outperformed today. Okay. Now, let's take a look at ETH. So this is the daily chart. This is ETH doing what ETH does, wiping everybody out below the 21-day moving average right before it goes up, right? These blue bars are squat bars. They occur within 1 to 3 candles of a bottom or top, usually, okay? In the case of ETH, I'm thinking somewhere in here, there's a bottom. It feels to me like the same thing with Bitcoin, even though it trades terrible, meaning it just looks awful. There's kind of like no bid to it. Okay, here's the 4-hour chart of Solana. 2131 is support. Guess what I've been trying to say for the entire live stream is find support. Find support. So in Avalanche, support was at 1679. It didn't necessarily hold. But pretty soon on a 4-hour chart, you're going to make a 9 bottom. Everybody was talking about Web3. Let's talk about Avalanche. Avalanche has a security token functionality. There was a representative from Avalanche on a securities token panel. Securities tokens are going to be necessary because when you have an event like we're going to have, like First Republic got liquidity because JP Morgan came in and acquired the assets. What happens if there's an event and no one wants the assets and there's no liquidity? Eventually, Wall Street will then embrace security tokens. And if you Google it, Bank of America and BlackRock are both calling for tokenized assets so they can get liquidity. Avalanche is included in that group. Now, because Avalanche is an altcoin, I don't know where you buy it, but I know I could get excited if it was back above support. Find support and then ask if it's holding, right? I want to pull up one stock. Probably going to be like, Bill, why are you pulling up a stock? Well, there's an ETF maker called Wisdom Tree. Okay, they literally make ETFs and mutual funds. The stock getting absolutely hammered today with all the rest of the financials. Okay. But one thing that is interesting about these guys, and, you know, the CEO is taking heat. I don't know if it's because of what he's doing with crypto. This guy wants you, or he wants people that have crypto to come over to his company that makes ETFs and mutual funds, i.e. skip Schwab, skip Morgan Stanley, come over to Wisdom Tree, bring your crypto, and trade tokenized liquid assets like stocks and bonds. So if you got Bitcoin, cool. You got AGIX, cool. Come over to Wisdom Tree and trade tokenized stocks along with it. This guy also wants to do gold just like we do at Emerging Asset Group, because everybody knows that the legacy gold market is not going to function in a crisis. Now, to make it even more comical, a 75-year-old mutual fund, Franklin Templeton. I mean, I couldn't believe what I was hearing. I mean, Franklin Templeton, that's like Charlie Munger kind of stuff. It's a 75-year-old company. Okay. They had a very enthusiastic following at Consensus because they want to get into NFTs and music NFTs as investable assets. So I'm listening to the CEO of Franklin Templeton talk about Rihanna music royalty NFTs, and I had to get up off the chair. I had to get up off the floor to get back into my chair. Now, for our friends at Franklin Templeton, word to the wise. When you're going to a crypto convention and you're trying to convince people that you're a legacy firm that's taking crypto seriously, the correct answer to the question about the relevancy of Bitcoin is probably not to say what they said, which was, drum roll, the government is not going to tolerate any threat to its status as the reserve currency, and Bitcoin is not relevant. Now, I'm not a Bitcoin maximalist, but I mean, does Ethereum and Avalanche and all that go along with it? So, okay, it can be cool to embrace music and Web3 and diss Bitcoin. It was very fashionable for 6 months when Bitcoin was at 17K, and at 31K, people thought differently. It's amazing. A mutual fund gets into digital assets, brings an entire marketing division almost to Consensus, and the CEO dissed Bitcoin on stage. Dissed the idea of cryptocurrency. Cool that they want to do NFTs. That may be one of the biggest markets in the world in like the distant AI future. But amazing how many people were not talking about a new monetary order. Okay. Video game time warp. For almost every bear market, I always thought Bitcoin would go lower than it actually did. Sir, your views are great. Your thought process is great for what it's worth. It's always good for somebody to be asking, hey, what happens if this whole thing comes unglued? Because clearly not that many people think that. Not that many people think that. Not a lot of people, when Bitcoin was at 14K, thought it was going to go back to 4K off COVID. Black swans do happen. I think the black swan is happening in legacy, and I think some people in legacy get it like wisdom tree, but it's clumsy. It's definitely more clumsy than going in and saying, I'm buying my NFTs. I'm doing it like Frank Sinatra. I'm doing it my way. Daniel says Bill gets it, and I appreciate that. Bill, my thoughts on the Australian government stripping the Reserve Bank of Australia from the ability to set interest rates. Who's next? Okay, a word on interest rates. Let's talk about who sets interest rates, what's political posturing, and what actually matters. Okay, when you start talking about interest rates, you want to start talking about the yield curve, right? That's the relationship between short-term bonds and long-term bonds. Now, why does that matter? Well, one, because governments don't set that. Governments don't set that. Okay. This is the yield curve. So the bond market builds the yield curve. Okay. This is not right. 1 second, brief technical difficulty. How does the bond market build the yield curve? Well, it decides what interest rate should have for a 2-year government bond, a 30-year government bond, etc. Okay. So that's better. So as you may have heard, the yield curve is now inverted, meaning long-term rates are lower than short-term interest rates, which of course has been associated with every debacle, 2000 and 2008 in particular. Okay. Now, central banks only set the overnight lending rate between banks. The yield curve, the relationship between long-term rates and short-term rates, that has nothing to do with central banks. Now, it does in the sense that they can print money, but who sets interest rates is political posturing. They want to strip the capability from central banks. No, they don't. They want the central banks printing money so they can stay in office. Or in the case of U.S. congressmen, so they can make money in call options and in stocks. So, yeah, people who are powerful want more control. Everyone wants to blame central banks for what's happened. Nobody was blaming central banks or even thinking about questioning their activities when everybody had all the sugar that they could eat. Now, the Australian government, I saw a headline that they wanted to eliminate cash. That's the stuff you got to be careful of. Who sets the overnight lending rate between banks? It doesn't matter. The market is going to determine interest rates because, yes, the Fed did raise rates and cause the short-term rates to go up and exceed long-term rates. But the market controls long-term rates. The market controls the mortgage rate, not the Fed. Not the Fed. Now, one of the closet fears that I have is that the yield curve is going to go back above zero because long-term interest rates go higher. Okay? So this is a very important point to consider going forward. Okay, let's sum it up. Everybody's going to sell Bitcoin overnight tonight. Tonight's Monday, May 1st. I think sell in May and go away is something for the second half of the month. I think your strategy starts now. Crypto Fork 20, welcome. I'm giving you the bottom line. Every time Bitcoin goes below 27K, I think you should look at it. Okay, so it's not investment advice, but if it goes below 27K, look at it. If they smack it, they're giving you a golden opportunity. Because let me tell you something. Final word. Anybody who thinks that Bitcoin trading at 23 or 25K isn't worth their time because you can't get a 10X in Bitcoin, think again. The charts that I showed you early in this stream about legacy, they speak to six-figure Bitcoin. And it'd be pretty funny if they did six-figure Bitcoin in advance of a stock market event that by now everybody knows is coming in October. People are not stupid. So everyone's like, oh my God, it looks like it's going to go down. Yeah, okay, great. Grab some. Again, not investment advice. It's a way to think about crypto. This is Bill Noble. I'll see you next time.